Gives me the prompt to let everyone know that this is being live streamed on YouTube. I just think it's funny that like I can't dismiss that, but whatevs. Here we are. I'm gonna go ahead and share this before we get too far down the road. But hey, Cookie, thanks for being here. And GP, we're missing Nick. Nick's on family time with the family for the holidays, but we thought it would be great to have a late Friday just chat about the market. And Cookie was so gracious to join us. We always appreciate that. And it's our quarterly meeting, Cookie. That's the way I'm going to call it. It's just our quarterly meeting. Every 3 months we kick it around again.
Isn't it crazy how quickly the 3 months pass?
I know. I couldn't believe it was only September when we last talked.
Yeah, and every time we talk, it's like the market is in the gutter, isn't it? And then maybe Cookie can like turn the market around on the call, but it seems to coincide with the 3 monthly calls that we have.
Save us, Cookie. You're our only hope.
Yeah, God. All right. Must be bad.
But yeah, I mean, obviously the market's kind of in a little bit of a it's a little red right now. The SPY's down not quite 0.15% or thereabouts. But yesterday was a pretty gnarly day for some folks, myself included. I took a couple of long shots on a trade, but otherwise, I think maybe Wednesday everybody thought Santa was coming to town.
Yeah, he got stuck in the chimney, I think.
Yeah, fat man needs to lose a few pounds, maybe.
Tough. Is that cue for me?
Yeah, I mean, you can jump in whenever you like. I just put this out on the stock twit, so I'm going to hit the Twitter right. Cookie, you don't have Twitter, do you? Or do you?
No, I don't. I mean, I have an account really just to go on there.
But you don't tweet.
I don't tweet. I never tweet.
I don't either. I do a poor job on Twitter.
Okay.
It's okay. I used to do a good job, and I got like 400 followers, so I stopped.
Right. I mean, for everything that people talk about stock twits, it's still the best place for chat about stocks, I think.
Yeah, I think I don't disagree with that. If you're part of like it's better than Twitter for sure, but I think it's also better for Twitter for us outcasts. All the finance heads and stuff like that, they love Twitter because they get engagement and conversations all the time.
That's true. But it's very hostile, isn't it? I mean, sometimes I go on there and the conversations on there, they're brutal. It's like
they're pretty brutal on stock twits.
Yeah, that's true. That's true. It's not that far behind.
I mean, and I'm guilty of this, right? I'm a Muppet. So are you, Cookie, right? I mean, it's anonymity. People feel like they can hide behind that, and I try to be good to people, but Twitter, it's completely different over there. That's one reason why I like stock twits personally, is because it's mostly focused to just stock. Twitter, you get into everything else, and there's a whole different internet tough guy over there, I guess, so to speak, that I don't enjoy it.
Okay, well, we've got things to keep us busy in the market, so
we do. So what the hell happened since September, the last time we talked, Cookie? I mean, we were down here in this trough.
We're still there. Well, no, we're a little
bit above it. I mean, according to GP, we're flat for 6 months, and I say we're still in a downtrend, but that's a conversation for another segment.
Well, no, maybe for another segment. But I'm with him on that.
The downtrend started, if you guys remember, to me, the downtrend started early, I think 2021, right? The initial January, February, when AMC and GME were doing their thing, mega caps were super weak, right, throughout, and banks were doing well. And so the downtrend started, and then you started seeing some red flags pop up, Bezos stepping down, and then other things that were happening. So we started the downtrend not in January. The January was like everyone who'd finally kind of distributed out at the top was not in the market, so the market can now fall, right?
Yeah.
So that's when the big downtrend began, but the downtrend started early in 2021.
Yeah, I agree.
So
I mean, I think,
to me, these last 6 months are sideways, right? And we're finding direction and stuff like that, and we're trying to figure out where the next direction is based on economic data, which seems to come out every day and destroy us. And then by the end of the day, everything seems flat. But it's to me, we haven't had a trend since June. It's just been sideways. That's half the year.
Couple of things on that. I agree with you. I think, the indices rolled over at the end of last year, right? And beginning of January, it was the indices that rolled over, but some of the individual names. I mean, you look at things like I don't know, SQ, which was popular, is popular, and others. They began to flatten out the middle of last year, or even earlier than that, right? So they've been, they were flat for a year, and then they died for a year, and so if you think about when they had their time in the sun, it was 2 years ago, right? Yep. So I agree with you on that this has been going on for a lot longer than many people think. And I remember back in the day last year, I would be complaining on stock Twitter, and everyone's complaining, oh, my stock is dying and the index is up, and I'd say, well, the F is wrong with you, just buy SPY then. and I was saying that for months, and then eventually SPY caught up, and QQQ caught up, and IWM and the indices, and they all fell over. And so I'm with you now. So on that part, I completely agree with that. The market's gone nowhere for 6 months, but but there's always a but. The flip side is, if you look at 2008, and many people are looking at 2008, the market went nowhere for 6 months before the second leg down, which was the biggest leg down, right? Let's pull up 2008. So, if you look at that, right? So if you look at 2008, 2007, 2008. So you could argue
SPY, right, Cookie?
Exactly. If you look at SPY, so look at
Cookie,
that.
Just one thing before you continue. The second leg began when the threat of the financial system was
I agree.
Right. So I don't disagree that we have potentially a second leg, but we don't have the catalyst at this point.
I agree with you there. I was going to add that. I was going to say that at the end. So, I mean, from a chart perspective, you could say, well, the thing is, it's very debatable what's going to come next as far as catalysts are concerned as well. And many people are saying, well, yeah, but, from a macro point of view, inflation isn't under control and the Fed's over tightening. So they can create a narrative for sure. And I think that's the reason why there's just so much debate out there right now. So I agree with you. I think there isn't that catalyst yet. Whether one appears, who knows? But I think it certainly forms part of the narrative that people are using, that the next leg down, the biggest leg down, has yet to take place because of that. But
every one of these downtrends, when we have these 30-35% corrections, has the ability to be the big one, right? The question is, will it be the big one? And there's definitely macro events that suggest that it's a possibility, because the Fed is still barking up the tree, but we have to see the data or the catalyst that kind of or it's the same catalyst over and over is driving us up and down, right? Like, oh, inflation is still high. Yes, the Fed is still raising rates. That's not it's got to be something that breaks overall.
So Cookie, if you can, you were saying 2008, right? We went, flat. I mean, this looks a little familiar, right? Like this looks a little familiar, and I hate the comparison of the analogs, but history doesn't always, sometimes rhymes, right? It's not always perfect, but sometimes it rhymes, and this kind of looks familiar, right? And this is not as pronounced as what we see currently. So I can see where the analog lovers get that. But I don't know that I'm full in that camp that we can expect this type of thing. I mean, we should be ready to expect everything or anything, right? I think that's one thing that you teach, is always be open to change and always be ready to go with the trend. And an argument that GP and I had on Sunday and during our last live was I hear for the last 6 months that the trend is flat, right? If we look at 6 months, we're basically just below what that looks like. But for a year, we are in a downtrend. Now, if I go back to the beginning of time, right, obviously it's just a blip on the screen of a larger uptrend. But until we can see some higher highs, I'm in the camp that lower lows are more likely. That's just, and I know you don't like those terms, higher highs and lower lows.
Okay.
But at the same time, like I don't think we're trendless.
Okay. I mean, there's no right and wrong answer. It's whatever, in the eye of the beholder, as it were. Right? Two people look at a chart and say, yeah, this is flat. And the other person will say, no, I think it's going down, right? I mean, that's not the important part. I mean, we can subjectively describe what we're seeing in front of us, but
right.
Ultimately, what will decide what comes next is, do trend lines get broken? Do moving averages hold? And do they start curling up? So there are things that we'll be able to see that will get us out of that, mess as to, is it 2008 or is it going to be something different? Is it 2015, 16, right? I mean, the period of going sideways.
Yeah.
That's what it feels like to me. And so I remember I remember the calls, right? Apple and Tesla are holding us up. That's why the market is not breaking down. Tesla broke down $75 or $80 in 6 weeks, right? We nearly got cut in half, and we're still sitting at the June kind of sideways action, right? Like, so a lot of the theories on why the markets are going to go down further is coming true. Apple's the only one that hasn't truly broken down, and it's looking that it may, based on the monthly candle. But all these things were supposed to destroy the market, and they kind of haven't. It's just gone sideways, right? So Amazon's sitting at lows, Tesla's sitting at lows, right? All the mega caps that were supposed to be the next leg down aren't bringing, so like other things are stepping up. I think that's what I'm noticing in terms of sideways, right? Like while the mega caps get distributed, the Qs are still kind of sideways, and maybe that's part of the next catalyst down, that everything just dies after that.
Yeah, I mean, it's possible. We don't know. We don't really know. I think a lot of it will depend on the impact of the interest rate hikes and stuff, whether they've gone too far or not, whether inflation really does come down. And those things are very difficult for us to comment on, I think. So the only thing we really have is price and trend, right? And I'm in the same camp as you, GP, that I think it's good that we're getting this. I think corrections in time and price are good. The markets can't continue to go up forever like they did. Could they go down a little bit more? Possibly they could. But I think it's I think the problem, just looking around, is there's just so much negative sentiment that nobody considers that possibility that the markets could go sideways, form a base, and then go higher. Everybody's just loaded to the gills with either puts or just in cash, and they're convinced that the market is going to go down to 2000, right? And that may or may not happen, but like we discussed earlier, we just got to be open to everything. And right now, it just seems very, very one-sided. And I think many people might be really surprised if the market not only does it not go sideways, but it even goes to all-time highs again within the next 2 years or next year, let's say. I mean, imagine if this time next year we're at 5,000. I wouldn't rule it out.
Yeah, I wouldn't rule it out either. And like with all the stuff that's also getting destroyed underneath, and we're still sitting at June lows, that becomes even more of a possible. We're basing or distributing, whatever you want to call, at the 2020 breakout, right? We didn't get any volume there. We just broke out, and then it was a breakaway gap, and we're coming back and retesting the breakaway gap here. And we're for 6 months sitting in this breakaway gap, building a volume profile that if we break it, the shorts from 255 down, I think will be much easier on the Qs I'm talking about, not necessarily the SPYs. But the shorts from 255 down will be a really smooth ride once we break that level. But we haven't broken that level. So to me, we're trendless. We're sideways. Every economic data, we go up, we go down, we go up, we go down, depending on what the zero DTE players want to do for the day.
Yeah, that's true. But maybe the picture is slightly clearer if you look at the monthly time frame, though. Right. So if you pull up,
it's definitely like it's rejecting the 9, right? I see that it is, but until we actually break that 255 level, it's hard for me to be like, buy puts, right? If you're buying puts 2 months out, you're getting destroyed.
Yeah.
And you've been getting destroyed all year, right? Like 2-3 months out, unless you time it perfectly, which most people can't.
Yeah. Or can't consistently.
Yeah. If you're buying time on your puts, then you're getting smoked. Look what VIX has done all year. It's made lower lows, right? Like it's underperforming while the market is down over 20, some in the Qs over 30%. So
yeah,
you would, if you told people back early in or late in 2021 that the markets are going to have a 30% year down, you would have expected someone or everyone to think that the VIX would have spiked to like 80 or 100, right? But we didn't get any of that.
Yeah, I think it's been very well managed.
Yeah, because everyone was hedged already, right, and already selling.
Yeah, and you know.
Sorry, Cookie. I was going to say, let's just talk about the VIX. You're one of the best VIX charters that I've ever seen. So you want to look at the futures of the VIX? I think that's what you like to go on, right, Cook?
Yeah. Shall I show my VIX chart? I can put it
up. If you want to share, please feel free.
Okay, let's get that out. Can you still
ironically
see?
While you're sharing that, the VIX is down and the market's down.
Okay, so share screen. Hold on a second. I should be used to this. Like I said, I do this every week, but 1 second. Let me get the chart up. You keep talking, right? Let me get the chart up first. And I'll get my VIX weekly chart, because that's the one that's the one you're going to love. Because it is, I think, a work of art. Hold on a second, just wait.
I think when we talked, not the last time, but the time before last, Cookie, I think we had the question of where do you hide, right? Where do you put your money? And it's been tough to put your money anywhere. I mean, if you're a trader and you've been nimble, you've likely been able to do okay. But the long-term investor, like myself, most of the time, I'm just sitting in cash waiting to deploy. And you wait for that all clear signal, but 2022 hasn't given you an all clear signal.
Yeah, it hasn't. I mean, so let me talk you through this. Can you see it?
Yes.
Okay. All right. So it's going to look a bit weird because I'm not going to explain the chart, like, how it comes together and stuff, but I'll explain what's happened during 2021 and 2022, right? So check out, so this ellipse here. Now, this chart, by the way, is about 15 months old. So I haven't made this yesterday. I've had this for the whole of the year, pretty much, right? So notice the resistances here in the VIX. Right, so that's the 30. That's 30 back in May. This is the failed breakout in March. Right, you can see the slightly low highs that GP was talking about, and then you see the moves all the way back down to the other side of the same ellipse. And then, so basically, what you've seen is the VIX has been very contained inside this space over here. Right, and you can see how it's been moving between these different areas on this chart very, very well since it's been put together. You can find, like, you see I don't know how to I don't want to explain the exact the background behind the chart, but just to show where we currently are and what could happen next might be more helpful. Yep. As opposed to just trying to explain the structure of the chart. So right now, what you see is, so these are the main areas that I'm looking at, right? So this area, which is 30, which, we've known has been resistance for, pretty much all of the year. So you can see the failed breakout over here, and then it goes all the way to the other side, which is this area down here. So now we're in what I call a new cycle, right? So the cycle, this is what I'm calling a cycle, which is on the left. It has that red roof on it, and that cycle ends this week. Right, curiously enough, right? So there's a lot of things happening this month. So this cycle, which began back in 2000 and 2018 and this week, right? So that's 4 years or so, right? And now what you see is the VIX bounced perfectly off the floor of this new cycle, which was at just over 20, puts a hammer there, and then it heads back up towards. So the reason why this type of chart works very well for me is because when I'm charting, let me just explain one of the things that will be probably the most helpful, I think, for looking at a chart like this is what I'm trying to chart is the range in which price moves. So I'm looking at volatility ranges, and that's what these charts show, is how much will price move in a typical move, for example, right? So, and what it does, it tends to move from one of these ellipses to the next, right? So it moves from the bottom to the top, and then either it breaks out and it goes to the next one, or it rejects and it goes back to the bottom one. And throughout this 4 or 5 year cycle, you'll see that. You'll see ranges. And typically along this chart, what I've seen is that the VIX moves in two floor ranges. 2 floors, 2 floors, 2 floors. Occasionally it breaks out, but over here 2 floors generally. Otherwise, you get these wicks above, but it's 2 floor ranges, right? So that explains this move that we've seen over the last 4 or 5 months as well. Right? So from the bottom to the top is a 2 floor move. So we come all the way back to the bottom. We find resistance here at this is a weekly chart, remember, right? So this is the 20 weekly moving average, which lines up with 25. So that's basically putting a cap on how high the VIX can currently go right now. If it breaks out above 25, it'll get to 30. There's a pretty good chance that it'll do it, because that's typically what the VIX has done over the years. It does these 2 floor ranges. So there's a possibility that it does that, but for now, it's rejected 25. You can see that it's a perfect move from the bottom. If I zoom in now, let me get rid of this timeline so you can see a little better. So it moves from the bottom with all the gaps, and this includes the contract rollover this week. Right, so you get the contract rollover, and it hits exactly actually there's a wick above there. What I've got here is the 50 daily moving average. I've marked on there as well as another reference point, but you can see it rejects that breakout and it's heading back down. So as far as what comes next in the VIX, which I think is probably more important to talk about as well, is if we don't hold a 9 weekly moving average, we'll end up coming back down to this area over here. And right now you can see we're just sitting there. We're sitting at the 9 weekly moving average. So a weekly close that holds a 9 weekly moving average will begin to look like this. Right, so you get that move from the bottom to the top around the 20 weekly moving average. It comes back as it rejects this ellipse over here, and then it finds support around the 9 weekly moving average. You get the wicks below, just like we're seeing over here. But if it holds the 9 weekly moving average, then there's that possibility that we could get that move higher in the VIX. And when you think about what's going on right now in the market, then this sort of makes sense. You're seeing the market struggling to hold 3,800, which is a key support level. We can look at the chart later as well. And if we lose 3,800, then the VIX is likely to hold the 9 weekly moving average and head back higher. And then it could end up going back to 30. Now, as far as what I'm projecting for 2023, right? So this is going out a little bit now, right? But I'm projecting that the VIX remains between 20 and 30 for all of 2023, that it doesn't go above that. And you can say, well, what makes you say that? What I'm looking at is, well, going back to the point that GP was making earlier, that the market is trying to base. And within that basing period, it could still spike. You could still see pullbacks, and you could still see the VIX spiking higher. And you'll end it with a market that looks something like 2021. Now, remember, all of 2021 was a bull market. So it's interesting to compare what did the VIX look like during a bull market to what it's currently doing right now. And my starting point is, well, this is nothing different compared to early 2021. So not 2022, right? So if the VIX was able to do this, and we still hold a bull market all of 2021, at least in the indices, which is what this reflects, then I'm not going to read too much into the fact that the VIX could even get above 25, maybe even get into this area, unless we break out above 30. Now, remember, we haven't been able to get above this ellipse, and the equivalent of that would be this area that's currently marked 30, right? So if we were able to get above this area marked now in red, then I think that's where the market will begin to break down. If it manages to get above 30, and I don't think that, I mean, clearly that's a possibility, but for now, we're nowhere near that.
Yeah, and that's been a great trade all of 2022, right? You 19 to 30 has been the range of the VIX for a lot of the year, and when we look at the future, a break above 30 would be pain for a lot of people who are long. A breakdown below 19. You haven't drawn your dungeons in there, but it would definitely be much further than 19 if it were to break to the downside too, and then obviously longs would be happy.
Right, but I mean, going back to what GP said, and I'm in complete agreement with him, is you need a catalyst for that. I mean, the last time the VIX went above this area, so 30 here, 30 here, 30. So this is during the bear market. In 2021, you didn't get the highest you got in 2021, which was Valentine's Day. I remember, the Valentine's Day pullback was early 2021, February was 26. It's crazy, and that was the highest they got to in 2021, right? So to get to these areas over here, to get to above 30 and 40, this was COVID.
Yep.
Right. This was COVID, and so people might say, yeah, okay, but something could break in the financial system, and that could send the VIX up to 50 and 80, because the talk of the town is, well, the market's not going to bottom until the VIX gets above 40. And I say, well, while that's possible, I just don't see it happening unless something breaks, something really serious happens, like something, I don't know, whatever, you can think of something, right? Like some big company, but too big to fail, dies, and I don't know, whatever else, right? So that could cause that sort of movement, but failing that, I don't see it happening. I mean, and a good reference point is, well, let's look at what happened to the VIX in 2018. So Christmas 2018, so Christmas 2008, sorry, this is 2017, right? But this spike higher in the VIX, which was the most significant move that we had in the VIX, preceding this one, it got to 33. And that was pretty major, that breakdown that we had in the market in 2018, right? So you do, so people talk about the VIX at 40 all willy-nilly as if it's going to be like something that just so
run of the mill, right? Like it's so common,
but it's very unusual to get a VIX above 35. I mean, you didn't get in 2018, and the only time you really did was during COVID, and then the tail end of COVID. You never had it above 35 after that or before that.
Yeah. And that's what, if you want to talk about a downtrend, this has been making higher lows since COVID, right? Since the potential of ending humankind is when we hit 80. That's what we needed as a catalyst to get to 82 and to break above 40, right?
Yeah. So, never say never, but I think, while it's always good to be open to all different types of outcomes, I think I just give it a very small probability that we see the VIX above 35 to 40 in the foreseeable future. And again, it could happen. I'm not ruling it out. I'm just saying we would need something like GP said, some sort of catalyst in the market that creates that. But failing that is going to be a run-of-the-mill run-of-the-mill. I mean, it's been pretty painful, I know, but bear market pulls back, pullbacks, PEs get corrected, valuations come down. That's it.
It's not the Fed, right? Like when I think of catalyst, it's got to be something that's, to me, it's got to be something that no one is really expecting, right? Like if the conversation is rates for higher longer, then all we're seeing is price action represent the shift in investment changes, right? From losing money companies to free cash flow companies, people who are making real products, etc. That's just it's a secular shift in how people are investing. Yeah. So like for the next catalyst to come, it's got to be something that's not Fed related, right? It could be World War III, because it's got to be something that's completely, can't just be J-Pow going pow, 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 right? It's got to be, it's got to be something that fundamentally breaks, like where
like the end of humankind.
Right, or like a Jeopardy, right? Like 2008, people like give that analog to this now, but 2008, I don't know if people actually remember. Some people obviously do, but 2008 was, holy crap, how am I going to feed my family?
Yep.
Right. This is oh, the market sucks, but I still got a job and I'm making more than I was a couple of years ago, and so like something has to fundamentally break, like mass, like as Cookie said, let's say Tesla goes bankrupt, right? Because Elon is convicted for fraud or something like that. That would be something that'd be like, holy crap, maybe there's something else wrong with the system, right? And then it's sell first, ask questions later.
Right.
And crypto FTX wasn't enough to me.
Yeah. I was going to say that. I was going to just talk about FTX and crypto. I mean, I was looking at the two periods. This year, you had 3AC Capital in June, and then you had FTX in October. And arguably FTX was more serious, affected more people, more institutions. It was more high profile. It's been in the news, all the different connections, all the conspiracy theories and stuff. Yet the impact of FTX was smaller than the impact that we had over the summer with 3SE Capital. And and I think that also speaks to that this has gone on for quite a long time already. We're not at the beginning of a bear market. We're probably close to the end of one that many people would like to think. And either there's just not that many sellers left, or people are just, people who are going to sell have sold, and those who are hanging around are they're just given up on either buying more, and they don't want to sell what they're holding, and the impact that you're seeing from some of these news stories is just not there anymore.
I didn't anticipate talking crypto, but since we got into FTX, do we think if Binance were to collapse, that would be a catalyst?
For sure. I think if Binance went under, it would be like my Jocks or whatever it's called.
But compared to like market cap sizes, right? We're talking about $100 trillion economy, and crypto being a really small, not economy, like stock market, the bonds and everything, and crypto being a real small portion of that.
No, I'm just saying an impact in the crypto market.
Oh, crypto market, yeah.
It'll wipe out the crypto market. It wouldn't wipe out the rest of the stuff. No, for sure. I don't think it's that big,
no. Checking our comments here, and we'll get to some of these questions later. I want to keep it on just the broader market and a couple of darlings that we have liked in the past. Cookie, one that GP loves obviously is Netflix, and we've all talked about Tesla. Anything can you share on either of those or your insights? And GP, I don't know if Cookie knows your Tesla or your Netflix thesis. You can explain it, but at the end of the day, like, GP views Netflix as the market leader, like bull market leader, where the market's going to go and lead the rest of stocks.
And Apple is my market leader, right? So what Apple's been sideways all year, and look at that, market's been sideways for 6 months now. So that, and Netflix has led us out so far, and a lot of people are talking about how Netflix is going to break down to next level lower. This is just your standard bear market, 50% rally from the bottom, etc. I still see the technicals on Netflix acting pretty damn well. You see like monthly moving averages crossing to the upside on a bull cross, and anything can die at any point in time. I'm not arguing that, but I like what Netflix is doing here. It's actually putting in a green week on this week after last week's destruction bar. So buyers are still stepping in. But that's my thesis, is that where Netflix goes is where the market goes eventually.
Well, I can share some thoughts on just technically from what I have here. When I put this chart together, I saw this period as being very similar to 2011 and 12 for Netflix. And in fact, you see that huge correction back in 2011. I don't know if the market did the same. I doubt it. I think it was a Netflix. Right?
It did. 2011 was that was recession year.
Oh, okay. All right. I wasn't born yet. No, I'm joking. So I don't remember that. But anyway, so you see that, right? So that huge move down. And then what you're seeing here is in fact very, very similar, right? And so people talk about analogs and stuff. For me, when I'm comparing areas in the chart, I'm looking at similar moving averages. I'm looking at how price moved in relation to the moving averages in the past to see whether it gives me any idea to how it could move in the future. So with this breakdown, and you're right, it was one of the first to really crumble. I think Baba was there at the same time, right? About a year ago, maybe before some of the others. So they just fell apart. And so when Netflix did this, it looked very similar to this period over here, right? So again, just looking at the moving averages and stuff, below all three moving averages, the 9 crosses the 20, we're below the 50 over here. And over here, we had that strong move all the way back to the 9 monthly moving average and then a double bottom. So about 4 or 5 months ago, over the summer, I thought that would be a possibility. So what I was looking at the time was, with this move, if it as you can see here, again, as you can see, price respecting these ellipses. So it rejects on the top, it falls down, it falls through 1, 2, there's a breakdown, and then it bounces here. It holds this for 2 months, double bottoms there, and then on the way up, it starts making its way to the next resistance, and it holds there. So it doesn't come back down to here. So it's already started to look a little bit more positive. And so here, what I'm thinking as well is going to get to the 9 monthly moving average as it comes down, which it does. And then it does something different to what it did in 2011. This time it rejects the 9 monthly moving average, makes that double bottom, even the lower bottom, right? Lower low over here. And this time it gets through it. So already back in October, Netflix was showing something different to many other things out there on a monthly time frame at least, right? And then once it gets inside this area that I've highlighted here, this is a failed breakdown now. So this is a failed breakdown, and you can see, so this was the month of October. November, it backtests it perfectly, and then it continues higher. So right now, as long as it holds 264, it's fine. And it needs to hold that. I think if it holds 264, then it holds this failed breakdown over here, and it will get to 372, which, and whether that takes a month, 2 months, or 3 months, it's likely to happen probably. I mean, the longer it takes, the higher it will get. I mean, 2 months later, it's at 390. It'll probably coincide with the moving averages. And you tend to see that all the time, right? So you'll end up seeing probably, unless it falls through 264, I'd be looking for 390, which is quite a move up from where it currently is. It's at 290 now to 390 is another 30% move. And so if the market doesn't die, and I think the weakness is, I know you say it's showing relative strength, but it's still just not, it might struggle to break higher if the market breaks down, right? It might go sideways whilst the market breaks down, but I think it will struggle to go higher if the market breaks down. But as long as it holds this 260, which goes up to maybe 270, then I think it's probably going to be fine, right? So even in the month of January, the number you'll be looking for is 273. And just one comment on candles and stuff. One thing you'll often see is, when you get a candle like that, then you'll sometimes see the next candle retracing the wick, right? So you might see that move back down to 273 to fill this wick in if the market remains weak, generally, if the broader market remains weak. Otherwise, I'll be buying the dips. If you've got any questions on that, do ask. Otherwise, let me just quickly pull up the weekly as well, because I've got a Netflix weekly too.
So I have 252, right? Retest the entire base of 6 months this year as a possibility, right? And then wick off that. So still close above your 264 level, but
perfect.
I can see Netflix doesn't trade like cleanly all the time on a day-to-day basis, but overall on like a weekly, monthly trend basis, it's pretty clear and pretty sweet. So I could see a trace all the way back to 252 to retest the entire breakout.
Right now,
so this
is where it's going to find resistance, and it has done so far. So I haven't updated this chart for a while. The last time I marked these pivots was late October, but you can see it's finding resistance where it broke down below the last support. So if I was to put 19, that's 258. Sorry, 358. What am I saying? Right, so that's 358. So it's going to find, and it has found resistance there so far. So I mean, that could put an end to how high it goes if it doesn't get, you can see it's struggling to, it's finding resistance in this area over here. So if it gets above 350, then it's going to get to that 390 area that we talked about, which is also, this ends up being a failed breakdown below all of this space over here. And then, well, it could go anywhere from there, right? It could go all the way back to the other side of this. So you tend to see, failed breakdowns will go to the other side of the space. We could end up being, God knows what, you could end up going back to 600 maybe in a year or two's time, right? So I mean, if you talk glass half full and the market getting better, then I think 358 is an important level for it to get above, and that's not going to change very much in the coming weeks. I mean, this on the weekly chart, it gets to 365, 370.
I have some time in April for like the move higher if it does continue to act well technically. But I have my thought process is that they'll need at least, like from a non-technical perspective, they'll need at least 2 quarters of like earnings post ad revenue stuff to show that they can do stuff, right? That that this is a viable product and that they can resume their growth model. So I can see it going sideways for the next while it continues to repair its moving averages. But that's I'm looking at your chart here, right? That's the 9 crossing over the 50 and holding, right? I have the 10, but you have the 9, and it's holding above that. It's a bull cross. There's a lot of stuff I like technically about this chart, and yes, it can fail at any point in time. I understand that, but so far, when it comes to technicals, it's been tending to act stronger than all its counter peers, right? Like Amazon or Microsoft or Apple or Tesla, and in this $100 billion market cap and above companies, it stands out promisingly.
I mean, if I was to find an area in the chart that resembled where we currently are, falling flat-ish, let's say it's falling, right? So falling 50 MA, the 9 crosses it, right? So the 9 is just above the 50 over here. You've got the 20 still below the 50, right, over here. So you can say we're probably somewhere over here. So I think, we'll want to see the 20 get above the 50 as well. But during this time, whilst the 20 is below the 50, you could still see some turbulence that tries to stop that happening, like over here. So this
that's my expectation to 252.
Okay, got it. Right. So and it's good. The time it'll probably happen as the 20 gets to the 50. So and you can already see this weakness over here. But you had that. The good thing about Netflix is it has these shakeouts every quite regularly. I mean, in every uptrend you've seen,
it's miserable, right? As a trader, it's just miserable. People hate it.
I mean, as a swing is probably a little bit miserable, but I think as a trader, it's probably quite good because it gives you opportunities to scale out and to scale back in again.
Yeah.
I think that's a good thing, right? So, you get on these, strong moves up, sell some, and then buy at the weekly moving averages because it always comes down there. Always comes down to the 9 weekly on the way up, and it's done that many times already since October. So that's an easy trade. So, if you think it's gone up quite a lot during any week, then sell some, and you're going to get a chance to buy it back maybe a week or two later. But what you want it to do is to not lose if thinking about, if I was to think about protecting from downside, you just don't want it to lose the 20. You don't want that to happen, right? If it loses the 20, then it's probably going to look really rough. You'll end up coming down here with the 20 before the 20 gets across the 50. And then it's going to look pretty nasty, I think. But hopefully it doesn't.
Yeah, agreed. Like if it starts losing moving averages and can't hold the technical levels that it's been for the last pretty much since April, then obviously it's time to lighten up and look to the short side. But right now, it's just behaving so much better than the rest of the markets.
Yeah.
We look at Tesla next.
Sure, we could do that. Let me get up the
Oh boy.
Okay, so Tesla, I've got a new chart for this. So I posted a little bit of it on StockTwiz, a monthly chart, right? So let me get this one.
I love when you show us new stuff, Cookie. I learn so much.
Right now, this chart looks just like Bitcoin, by the way, right? And it's not because of clearly business models or whatever you want to fundamentally, chalk and cheese, right? Night and day, nothing to do with one another, but. Names like Tesla, Bitcoin, crypto move very, very similar in terms of price action, right? So if you look at Bitcoin chart, you've got the double top over here. You've got this would be the equivalent of 18,000 on Bitcoin right now. So it falls through supports, it's at 18,000, and it's currently holding this 124 area. So, and Bitcoin is holding support as well, by the way, right? So it's interesting how these charts continue to look very, very, very similar to one another. I mean, one thing I would say is, I would want Tesla to remain inside this green space over here, right? So you can see you can see the resistance that it found over here. You see that candle, the wick there, that perfect wick there. So there was a rejection there. It finally gets through into the green space when the 9 monthly moving average squeezes it through that, and then it gets to the other side. And then notice here the 9 monthly moving average doesn't break out. Right? The 9 monthly moving average rolls over on the top edge of that green space over there. On a side note, so when I'm thinking about breakouts, I always look for the moving averages to break out, and that's something that nobody else really can. Well, I'm not sure. Maybe some people do. I shouldn't say that, but it's something that I always look for. And what it does, it helps me spot failed breakouts. So even though a candle might break out, you want the moving average to break out as well. That basically tells you that the trend has broken out. And unless and until that happens, you could still see reversals. You could still see the moving average rolling over like it does over here. So it's a great example. And it's the same on the other side. You see prices going below moving averages, but the moving averages themselves don't break supports. And so what that tells me as well on the other side, and so we're thinking about Tesla specifically, is over here, right? So you can see I would want the 50 moving average, which is the black one here. This is a monthly chart, by the way, right? I want it to get above 170, but you can see the 50 MA is rolling over here, which isn't great. You don't want the 50 moving average to find resistance at this, what I call the black hole ellipse. right? Because and that's why I paint them in black, because it's a very important, resistance there. It comes all the way back to the bottom. It finally breaks through that spike. So this is the November candle. Last month, you see the bounce off there, and then it breaks down in December. And it's doing so before the 50 MA pushes through this black area over here, which isn't a great thing long term. I mean, it doesn't mean it's dead, but it just means that we could see a longer period of consolidation. That's all. That's what I'll be thinking about. And you know, so right now, the big picture for Tesla would be, ideally it holds 124. It consolidates around the 50 monthly moving average, and it does so such that when the 9 monthly moving average comes down, it doesn't push price below 124. Now, that might not happen for a couple of months yet, but you want it to hold this 120 area as the 9 MA comes down. And 9 MA might come down in February, or you know, maybe in 2 months' time, it'll be down here somewhere. But yeah, I don't know. It's not a great look.
Hey, Cookie, this is something that I've often just thought, so I'm curious of your take. Obviously, when a price holds a support, that's a good thing. But the longer it doesn't get up off of that support, how long before you look at that as turning bearish, right? Like you keep bouncing up and then falling to support, and bouncing up and falling to support. At what point does that support in your eyes basically become degraded?
Okay, it's the moving average that pushes price through support, right? I mean, think about it logically. And here's a great example, right? So you've got the consolidation here. Let me. So this is the weekly chart for Tesla, by the way, right? So let me just put this one in a slightly different color. Hopefully you can see that. I don't know. So you see that, well, no, I don't need this here. Let me get rid of that. It's just too much information. So you see, can you see this area here, right? So you see, this is 2 months on the same support, right? So this is for this first move down was the 5th of September, right? I always get the dates funny because I'm English, right? And the dates are American, but yeah, that's the 9th of May. That's the 9th of May, and it goes sideways until the 27th of June. So that's 2 months. So to your question, how long can price sit on the support? Well, it all depends on what happens when the moving average comes down. If when the moving average comes down, it forces that decision. Either that consolidation ends with a breakdown or a breakout, which is what happened over here. So there were multiple occasions when Tesla could have broken this support, but it didn't. It held on, and then when this came down, that squeeze creates that push higher. It breaks out above the 9 weekly moving average. So there's actually a natural wedge there. So you've got a support there, you've got a resistance there. Price comes into that. It spends 2 months there, and it gets squeezed to the north. Now you look at other things. Now, so now here's an example showing the reverse. So you've got a support over here that I'm highlighting here. You can see it spent 1, 2, 3, 4 weeks. The 9 weekly moving average comes down, and this time it doesn't squeeze past the 9 MA to the other side. It gets pushed down. So what decided that breakdown was the 9 weekly moving average. And again, similar to what I mentioned on the chart before, it's the trends that break out and it's the trends that break down. When you look at higher highs and higher lows and lower highs and lower lows, that's fine, and I've got nothing against that. But what this idea does is it gives you something very objective in terms of timing for when a consolidation might end, how long a support might hold, how long a resistance might hold as well. And you can see here again, so if you talk about resistances in the same way, price is struggling at this resistance for 4 weeks. When is it going to break out? Well, it's decided when the 9 MA gets there, or when the moving averages arrive, and then it forces the move. So the good thing about this, in summary, apart from it telling you this is, you can forecast how long a consolidation might last using this. And you can use that to then plan your trades as well. You say, well, okay, I might either put up with the consolidation, or I might come back because I know the 9 MA will be at that support in 4 weeks' time or 3 weeks' time or something. And it's very powerful, and it works all the time. I mean, that's just a property of price and trend. It does that. And it's the trends that decide everything pretty much.
So in your mind, that was a great description. And just to summarize that, right? Price can stay at support as long as it's a valid support until the moving averages arrive, and then a decision has to be made. It's either up or down.
Correct. And so now we're looking ahead to what could happen next with Tesla. So this is what I've been talking to my guys about is, well, ideally I wanted it to hold 132. I wanted it to hold this 130, 140 area over here until the 9 weekly moving average came down, and in 2 weeks' time, this creates a V, something similar to what we had over here. Right, so you get that move down, and then eventually, as the 9MA comes down, it gets squeezed higher. But on this occasion, we didn't hold 145. We didn't hold that 145, 150 area. Price broke down through it, and so now it's just going to be longer now for the 9MA to arrive. So the effect of breaking down is two things. One is clearly, price is lower than where you'd want it to be, but it extends the period of time that price can consolidate until the moving average arrives on the scene once more, because now there's all that space there. Right. So again,
on the Tesla chart here, Tesla's price needs to find that support, whether it's around 132 or 107 or thereabouts. It needs to base out. The moving averages will eventually catch up and come down, and then it's going to be a decision, right? Of, is it going to squeeze it up or is it going to push it further down?
Correct. And also what I would say is, don't be disheartened from, by the fact that it's below this channel, that's below this, because we've seen wicks below here. I mean, the thing is, we're closing the week today, which is a shame, right? Because you're not going to get a wick. Well, who knows? I mean, it's still got 4 hours left. And never say never, right?
Right.
But to hold this channel next week, it would need to hold 129, let's say 130, right? So it needs to hold 130 to be back inside, which isn't that, it could do that. It could do that. Or if it closes, let's assume it closes below 130 today, then what I would be looking for next week on Monday, early in the, or sometime during the week, is the back test at 130, and use that to decide whether it's broken this support or not. Ideally, what happens is it stays inside this area over here until the moving average comes down and it forces that decision, as we said. And the closer it stays to this area, the sooner that decision will take place. Otherwise, it might be a month from now instead.
Hey, Cookie, I want to be really cognizant of your time. We only have about 10 minutes left, unless you're good to go on just a little bit further.
I'm good. If you want to listen, I'm happy to.
Yeah, no, we're great. I can stay on a little bit longer. I'm in GP. I'm presuming maybe you can too.
I can.
But yeah, I just want to put that out there. We're almost at an hour, but if we can keep going, that would be great. Okay, I do want to look at a couple things that we're getting in the chat. One thing was China, mentions of China. Obviously, if COVID comes back in China and is bad there, that could be, a catalyst in the market. But we're also getting a comment here that, maybe China has already bottomed and is poised to outperform the U.S. market next year. Cookie, you have any take on that?
Yeah, I can show you something. Just before I do, I've just added this support here, which is this wick from this failed breakdown, and it gives us support over here. So I think the low of the week is actually a support. So what I would be looking for then, just to fine tune this a little bit, is for price to move between this week's low and 130 next week. So this gives a good trading range. I mean, it might even get as high as 145 to backtest this loss support. It could get that high, right? So I'd be looking for this range to trade, and then until the 9 weekly moving average comes down. So yeah.
Great, thank you, Cookie.
No worries, man. Let's take a look at, I've got a yin chart, but it's not updated. I think it's a very old chart. Okay, so the problem with this is I think they did a split or a reverse split or something, and because it went down the toilet, and then so this chart was drawn I think a couple of years ago, and then at the time price was up here. But what's interesting is even with the split, everything, all my chart gets shifted vertically. So it's the same chart that I had a year or so ago, but you still see how price still reacts to these areas which have now moved to the side. But anyway, back to here. What I'll be looking for as far as, so I'm using yin as a proxy. So yin is 3 times it's a bull ETF, 3 times leverage for China big stocks, right? So clearly this is not all of China, but it's what I've got for now. What I'll be looking at is, this is a pretty clean So you've got a consolidation which lasted years. From 2009, it went sideways until all the way to 2021. So that's 10 years. And then it collapsed, right? So there's that big breakdown. So this coincides with, the Babas and the others of the world that went downhill fast. And then what you're seeing is with the bounce that you saw a month ago, 2 months ago. So this is the bottom that we had. And again, this is a very nice touch of 19 on the on this yen chart. You can see it bounces, it closes there. It fell breakdown below 25. It goes all the way up through 33. And then with the failed breakdown below 33, it has a chance at the 9 monthly moving average, which it hasn't been able to take out. So far at least, what it's showing you is that this move has stalled at the 9 monthly moving average, which is what I would expect, because that's what you'll tend to see in any breakdown, right? But what you want it to see now is for it to hold this level. So if you want to use yin as a proxy for the China trade, then I would want to see yin hold 33 down, and it's not going to move too much because it's quite shallow, right? 33, 32 in the coming months. And so what you'll find then is what we talked about similarly on the previous chart is you'll find price will consolidate here. So either price will push through the 9 monthly moving average in the next 1 or 2 months, or I have no idea which of these two will happen, obviously, right? Or it gets pushed down and it finds support at 32 until the 9 monthly moving average comes down in, maybe 2 or 3 months from now, maybe in March or April. And then that squeeze that takes place here either resolves up or down, like we talked about with the Tesla chart before. So that's what I've been thinking about. I think it's probably, you could see 3 months of sideways price action in these names. Let me just pull up the Baba chart, because that's the one that I do have. Again, it's not indicative of the whole market, but it might give us an idea of what's going on here. So again, you can see very similar to the yen chart, the breakdown, the downtrend channel. So this is what I found. If you take a look at, so again, the Baba was a fantastic name. Everybody loved the stock, right? It was like Amazon and stuff. Right? Oh, fantastic! What a great name! And it did do well. It was a bit choppy for ages, right? But it did do very well. It went all the way to 300 and something from this level down here. Post IPO went down to when it bottomed at 58, went all the way to 350. So that's 7x, and then it gave all of that back, and it double bottomed at that low. Right? So it double bottomed there in October. And then you can see here again, so it struggles with a 9 monthly moving average. It finds the edge of my downtrend channel. See the edge of the downtrend channel over here, the same edge over here, and it rejects it then. So as far as Baba is concerned, I want it to hold 85, and it's pretty close to that. You can see, and this is why I said there's nothing random in the market, right? So we can talk about all sorts of catalysts and stuff. But so what I want is to see 85 hold in January. If it holds 85, it'll be good. If it doesn't hold 85, it'll be less good. And that's just sitting there. And maybe this is just, again, similar to the overall market holding 3,800. And I say that deliberately, meaning you'll get, whilst many people will have seen this as the beginning of something spectacular in China, what I always look for is at what point do the charts start looking the same? Mm-hmm. And what I mean by that is, let me give you an example. At what point does Tesla start behaving like the rest of the market? Because that'll give you a good clue to what comes next, because you want things to behave as the market does. You don't want them to be on their own. So if Baba behaves like the S&P does, then it's hard to argue that it's a China story and it's not just a global equity story, right?
Sure.
So that would be the thing I'd be looking for. And so right now, with the stock market holding 3,800 barely, and Baba holding 85 barely, I would argue that they're showing the same thing. I'm not seeing anything in Baba that suggests it's doing anything different to the rest of the world, or the rest, or the US markets. If Baba was above the 9 monthly moving average, if it was above 97, if it had broken this downtrend channel,
it's an outlier, right?
Then you could say it's different, but it hasn't. But so far, it's still in the same downtrend channel that it was at the beginning when it started falling down. So I want it to hold 85. It will look different if it gets above 97. And that will be when you start saying, well, maybe China is different. But maybe if Baba gets above 97, maybe the US stock market is above 4,000 again. Maybe it's crossed that downtrend line that we keep talking about. It's the same thing, right? I mean, if you think about the US stock market, so this is the 400 area in the S&P. It's the same. It's exactly the same.
That's great insight. That's good stuff, Cookie.
Yeah, no worries, man.
The other question we had coming in, and this is a topic that our regular watchers like to throw at us. XLE. You think that would be a good short? This is not financial advice, but GP and I have been screaming for months that crude looked toppy and that the XLE looked toppy. But Cookie, interested in your take?
Hey, we talked about oil when I was on the call last time. Remember that?
We did.
So let me get my CL chart. Do you remember what I said last time? I said it would go in a range. I said it would range between 70 and 90.
Yep.
And that is more likely to do that than break down. Because that's what it had done historically, right? So let me just get, this chart looks a bit weird because it's wick down to minus.
Yeah, the big negative wick there.
But I still managed to chart it. Let me get this. Let me open it up. So so we talked about it a month or 3 months ago. And I was looking for it to move in this, down to this support, which is what it did. Right, so let me just zoom in a little bit. So again, the reason why I thought that, just to share that with you, it's not because of any psychic powers, it's just based on how prices typically moved in the past. Remember we talked about the VIX chart, how it typically moves in two-floor moves or two-floor ranges. Oil does the same, or it has done the same typically, right? So back from 2016, it's consolidated, it's moved sideways here, but it gets up to there, it moves all the way back to down there. So again, you're seeing this, symmetrical moves either side of the center line in red, which is what you're seeing over here, right? So you've got that move to the top at 120. It goes all the way back down to the bottom at 70. I think what was the wick down there? 70. Yeah, exactly 70, 70.1, right? And now it's moving back to the center line of this channel, which is 82. So right now, as far as oil is concerned, I think it's just in the sweet spot. It's not doing anything unusual. It's not. I don't know. I don't want to use the word cheap or expensive. It's just in the range that I'd expect it to be in. If it goes, so more significant would be if oil went below 70 and stayed there, and it ended up going and pressuring the 50 monthly. This is a monthly chart. If it ended up pressuring the 50 monthly moving average, that would be significant, because then you end up with something that looks like this, right? So this is what oil breaking down would look like, right? So right now, and it could do that, right? So I'm not ruling it out. So what you're seeing is you see the 20 monthly moving average rolling over. The 9 has already rolled over, and that's going to meet the 20 in the next 2 months or so, which could end up looking like this area over here, right? And then you see oil going sideways for 6 months. But the only difference between this and this area over here is the space you've got down to the 50 monthly moving average. So whether you get to the 50 monthly moving average or not will be decided by whether we hold 70 or not. And you see you've got such a strong bounce. Look at the wicks on these 2 monthly candles at 70. Right, so there's certainly support at this, at this area here. And again, it lines up with support that you had a year ago. Multiple supports at this ellipse over here. You can see all the way going back to 2000 and 2016. So 70 is an important level for oil. If it doesn't hold that, then you'll see a consolidation between the 50 MA and the 20 MA, and that could lead to an eventual breakdown, like you had over here. Maybe not as serious as 2019. Right? This was COVID, right? Maybe again, without a catalyst, I can't imagine anything like this happening again. But you could see price just consolidating at a lower base if we don't hold 70. So that's how I'd say that.
So maybe like that, what is that, around 65, 63.74 would be the 50, still up to that 94. So it widens the range that you said 3 months ago, a little bit, not a lot, but still 70 to 90 is a pretty good rule of thumb.
I think so. I think it's good, and all stocks are doing very well, right? I don't really follow them, but I heard that they're still great picks for 2023. I'm not sure. I haven't really looked at any.
Yeah, the XLE is actually up for the week.
What was a great pick for 2022 and 2021? Amazon. Weren't there price targets of 4,000 or whatever it was?
Yeah.
I mean, like,
okay, I see what you mean.
I mean, like, there's a lot of people saying a lot of things, right? And price is ultimately what matters. And you already know that, Cookie. That's just
well, analysts are human too. They're wrong, right? Like Mike Wilson had been wrong for multiple years, and now he's basking in his bearishness, right? And yeah, he predicted what would happen in 2022, but again, he came with several years of fighting an uptrend. So I think got to take what analysts say and their favorite stocks a little bit with a grain of salt. Anyway, just my take.
Here's my Amazon chart. I'm interested.
So like to me, XLE at this point on a monthly basis still looks like a failed breakout. And oil is doing better this month than it did last month, but XLE still looks like a failed breakout. So unless something happens here in the last 4 trading days of the year, there's still room for concern on what XLE is doing.
Yeah, I think you're probably right, GP. It probably needs to get up into those 90s, right? Like at least like 90 and a half, something like that, to make it not look like a failed breakout. But to me, it looks a little.
Last month's close was 90, so somewhere around there or above there by the end of next week would be a level I'd be looking to.
It's at 86 right now. Not impossible. Oh, no, sorry. Yeah, it's at 86.51. Not impossible to do, but not exactly my favorite setup.
Do you want to take a look at it? I don't have it charted, but I can take a look. Whilst you're talking, it'll take me a minute to get a chart. It's a bit slow, investing.com, when we're streaming, but hopefully I can get it.
We're patient, Cookie.
Yeah.
Okay.
We're on your time now.
Similar to how it's been interesting to see the XLE outperform oil over the last 6 months as well. And now oil is starting to kind of base a little bit and potentially find some sort of bottom range. XLE could definitely push higher. I can see that, but I look at the after years of looking at charts, I look at the oil chart and immediate thought is I don't want to touch this right now.
Yeah, looks a bit. Well, let me throw a channel on there, see if I can see where it might go. Put some moving averages too. Right,
like that's like on a monthly basis, that's potentially a head and shoulders. I know that everyone sees that, so it's most likely not going to play out. But yeah, if everything you're saying about the Qs and the SPY, not you, Cookie, not you, Bags, but you as the collective whole, that the whole market is on the verge of collapse. Oil and XLE don't magically survive. Nothing survives. It's sell first, ask questions later.
Agree. Yeah. I mean, in 2008, didn't oil die as well? Everything died.
Yeah, everything died.
That's the thing.
So did something die 70% or did something die 45%?
Right. I don't know.
But if your macro thesis is that this is a shrinking economy and we're on the verge of something breaking really badly, oil doesn't get spared. It's not this magic unicorn that says, cool, we're gonna outperform here. And on a relative basis, it can outperform, but it's still going to get sold. If people can't feed their families, they're not going to travel anywhere. They're not using oil as much, etc. Right? Demand goes down.
I mean, the trend-wise on the monthly chart doesn't look terrible, but it could pull back to the monthly moving averages like it's done in the past. I mean, if you look at previous uptrends going back to 2003. It's regularly pulled back to the 9, which is what you're seeing over here, right? I mean, I know the thing is, because this move was so stronger than the previous moves you've seen in 2003 and 2011, maybe that's why you're seeing much more of a violent consolidation this time around compared to the more gentler consolidations you had back in those previous markets. I mean, that could explain why you're seeing that mess now. The only way you'll really ultimately know whether it's going to play out differently is if it stops holding the 9 monthly moving average, right? And right now it's still holding that. So I mean, I'd give it that benefit of the doubt. And also notice the 50 MA is actually now turning up, and it hasn't done that in God knows how many years, right? I mean, you've got to go back to this period here where you had a rising 50, a 50 monthly moving average. So where people say, oh, this is still just the beginning of the energy story and stuff. I mean, maybe there's some merit to that, maybe, but again, I would want to see the monthly moving averages hold for that.
Yeah, and it's pretty far from the 50-month, right? And typically XLE doesn't stay too far from the 50-month for very long. So
Yeah.
that's probably the most I've seen it extended from the 50-month, right? Except for 2011. I think might have been more extended, but it's definitely got bullish trends on a longer time frame, but it's also done a hell of a move, right? So it can whipsaw a lot.
Stop it, Cookie. Stop matching these channels up.
You see, that was pretty magical, right? You see that? So I'm just going to do that. So there's that, like that, and then I'll just put.
That's almost smack off the middle of that channel right there.
So there's that, and you've got the 9. So the 9 monthly. You can see. So this is nice, right? So you see that there is the consolidation over here. So again, another example of the consolidation at support. In this case, it lasts a year. The 9 monthly moving average comes down and it craters there. So again, you can see how long that support lasts. It's all driven by the monthly moving average. You've got the 9, the 20 all rolling over. Clearly, this is different. But the reason I just mentioned that is because here you're seeing the 9 monthly moving average break into a channel. So that's a breakout, right? So that 9 monthly moving average, whilst it holds inside this space, it's a good thing, right? So I'd want to see that hold. So if you're thinking about adding a pivot here, price label, then I would want to see it hold even slightly below the 9 monthly moving average at 80. Right, so it could come down to that. And if you went, let's say go out a couple of months, it's not going to move by very much. 81, 80, 81, right? So just marginally below the 9 monthly moving average. If it held that, it would be okay. So if I was to just get one more of these and just clone the charts, if anybody wants to copy it, they can. By all means, I'll put this one here too, like that. And you can see, well, I mean, it's not exact, but it's pretty close. You see the wicks on the lower edge of that channel. So if I mark this one in red, so you don't want to go in there, and that's fine, right? So in the green, in this area over here, we'll call that, put that in green. Again, I'm a bit perfectionist when it comes to colors and stuff. There you go. So that's basically what you want, right? So it's had these moves up and then it craters down, it goes up and then it goes down a few. So maybe it's stacking them in the right direction again. Who knows? I mean, again, I think notice this as well. You see the 50 monthly moving average rolling, or turning up at the baseline of this channel over here. Can you see it like this? See that? And when it did do that, notice that it stayed there from 2011. So from 2012, that's the end of 2012. All the way to 2014. So there was 2 years where it hugged the baseline of that as prices went higher. So again, I would just keep an open mind here and say, yeah, while it might look a little bit ugly here, let it break down and show you that. But if it holds 80, then I would buy dips to that. And you can see it's trying, it did bounce off the 9 monthly moving average earlier in the month, as oil bounced maybe, but that's what I'd be looking for. So I'd be 80 on as a support, and it could get even as high as, again, it's not going to happen. It's not going to move that fast. You can see the candles are quite, quite shallow. So it could get to 140 maybe in 2 years or so, something like that. So I mean, again, then you decide whether that's okay for you, right? I don't know.
No, that's a great new wave that I haven't looked at the chart. So I always appreciate the alternative perspective, Cookie. That's awesome. Yeah. I want to be cognizant of the time. Last thing I want to look at is we can look at Bitcoin and or Ethereum. It's up to you, Cookie. But this is one that takes us back to our Tesla conversation and my question of how long can something hold support until it's going to break down? Because Bitcoin has been dragging these levels for, I don't know, it seems forever now. It really hasn't been, but it seems like a very long time. And I just want to get your perspective. We haven't chatted crypto in a minute.
Okay, here we go. So here's my Ethereum chart. Let me start with this one. I know I actually might look quite busy now because I've got lots of lines there, but let me zoom out a little bit so you've got some perspective. Right, so the red channel. So looking at this red color here, it goes all the way back to there's a label that says from all-time highs, but anyway, just so you can see it. So this is where the all-time highs are. So this is 4,800. So that's 4,800. You get that move back, you get that failed breakout of the red channel over here. And that's basically the beginning of the end of Ethereum. So this is all the way back in November of last year. And it travels down the red channel, way below these channels, but eventually it catches back up, consolidates. And this is a 4-hour chart. Right? So this is going back a year and a half or so. Right? And so again, what you saw was so in November, this was SBF, I think. Mm-hmm. Yeah, it was. So this was SBF, right? So curiously enough, it happens at the edge of the same downtrend line as
convenient.
Conveniently, yeah. I mean, it's always like that, isn't it? I mean, everyone says the markets are rigged, and I would tend to agree. But so it happens there, right? And it craters down over here, and then this is where crypto is in the doghouse for weeks. But following this breakdown, crypto goes sideways. So, at least Ethereum and Bitcoin do. So Ethereum and Bitcoin go sideways. The altcoins get shattered on them for weeks. Even after that, right? They absolutely cratered. But the Ethereum and Bitcoin went sideways, and in doing so, they found themselves at the same technical space as SPY, meaning at the edge of the downtrend line connecting 480. Right. So remember, this connects 5,000 in Ethereum. This would be the equivalent of 480 in SPY. So what's interesting, and this is what talking a little bit about earlier, is at what point do things which have suffered a shock end up being the same as everything else again? And in the case of crypto, following this initial decline, what you saw was very quickly afterwards, Ethereum and Bitcoin started behaving the same as the NASDAQ did. Mm-hmm. Right? So there was no breakdown in the relationship between the NASDAQ and crypto, at least for Bitcoin and Ethereum. All the altcoins went down the toilet, but Bitcoin and Ethereum held together. And so with the stock market at 400, rejecting that 400 area, 405, well, Ethereum did the same thing. And what was interesting is coming into the data this morning and yesterday, Ethereum is at that downtrend line again. So where's SPY today? It's at 380 something, right? 384, 383, something like that. I don't know, 384, something like that. So the downtrend line on SPY from all-time highs is currently at 401 or 400 or something like that.
381.83 right now.
Got it, 381.83. And the downtrend line from all-time highs at today's prices would be, I wanted to go through this chart, but I'm not sure if we're going to have time. If you have time, then I will go through it. That is at 380. Hold on, no, it's not. It's this one here. It's 404. So 404 is the line that connects the all-time high. So Ethereum, funnily enough, is closer to breaking all-time high, the downtrend line from all-time highs than the SPY is, despite what's happened in crypto over the last month and a half, which is shocking, right? I mean, it doesn't mean that Ethereum is going to break out. I mean, it could reject here, right? So over here, you saw. So remember we talked earlier about this is the moving averages that failed to break out. Yep. Right? So price gets above, but the moving averages don't follow. Before the moving averages get across, price pulls back and it stops the moving average or the trend breaking out. And that's what happened over here. And over here, you almost got that. It's the 50 MA that turns back. And the 50 MA, which is the black one here, the 4-hour 50 MA, turns back at the line that connects the all-time highs. Over here, it didn't get anywhere near it. The 50 MA is over here, right? It didn't get anywhere near that downtrend line. On this occasion, we're just hugging that line. So Ethereum is actually not that far from actually breaking out, at least breaking across this downtrend line. And again, it could die this weekend. It could, right?
Right.
The market is in a delicate spot as well. You've got Apple on a key support. You've got Tesla almost breaking down again. You've got SPY at 380, struggling to hold 380. So, the only reason I wanted to share this was it shows you how similar the markets are once again, how the crypto has been able to digest what's happened over the last 2 months, and how, and also I'm using this to not rule out that the market breaks out, right? So if crypto breaks out this weekend, for whatever reason, and it might just be technical, right? Let's say it breaks out over the coming 2 or 3 days. Well, that builds the case for stocks doing the same next week. Because you're not going to get Ethereum. You're not going to. It's going to be unlikely that crypto breaks out and the Nasdaq doesn't. I mean, it could happen, but I can't see it happening. The only way that happens is if you imagine the case where crypto starts decoupling from the Nasdaq, right? And there has been talk of that. That people say, oh well, maybe Bitcoin and Ethereum start moving separately from the rest of the market.
And that was something that we talked about on our last call, as Ethereum being a canary in the coal mine, so to speak. Of what could be to come. And I, similar to GP's thesis on Netflix, I think the Ethereum lines up very well, especially given the fact that it is so much closer to breaking that all-time high trend line, that it could be a leader of where things are going to go. And especially in the tech space, we've seen it in the past. And you're absolutely right, in my opinion, that unless we see that decoupling, that's the only thing that would make it become an outlier as opposed to a trend leader.
Right. And just like we said at the beginning of the call, it's good that we come full circle that whether it's Ethereum or whether it's SQ or whether it's some of the other names, right? So these technology, let's call them technology leaders, right? They've been going sideways to down for 2 years. Right? So I mean, Ethereum, it made a slightly higher high in November of last year, but you can say it began struggling in March of 2021. So that's almost 2 years, right? Sorry, this is Bitcoin, right? So again, but it's still about 2 years. Now, what we've seen since then is this what I have is this idea of a possible falling wedge, right? So I marked this yellow area of this overall beige channel here about a month or two ago, and I said, well, anytime you come into this yellow strip, I'd buy that dip, right? Now, clearly, it could go all the way down to 13,000, but it didn't. And so I drew this channel here because in this, with these dimensions, because it's roughly the volatility that we saw, the range of, so let's call it the range of the weekly candles back in 2000 and early 2021, and can you see here again? Let's call it consolidation, even though it's falling. Prices are falling here, but it's a consolidation on this support until the 9 weekly moving average comes down and it squeezes prices to form a new all-time high. So I mean, clearly that was amazing what happened that time, but that was a consolidation that took place over there. Now, as we fast forward to this year, again, you see another excursion. So this is during the summer. This is 3AC Capital. Price comes back down to here, tests the same support in 2020, early 2021. It spends 5 weeks in this space. Over here, it spent 2 months there. So it spends 5 weeks over here. And I noticed that. I noticed, well, it spent 5 weeks over here. Maybe this time around, it doesn't spend as much time. Maybe it doesn't go as deep. Because if you look, not only does it spend less time there, but it doesn't go as deep. There's one candle that touches the other side. Over here, we touched the other side of this channel multiple times over 2 months. So there was a progression also, not only in how prices were moving down, but also in how long that consolidation in this area lasted. So I called it my shopping channel, right? So I put it over here. So I had this little smiley face and I said, guys, if it comes over here, buy it. And so together with the falling wedge, there was the possibility, even though you've got very weak prices in Bitcoin and crypto at large, it could be forming a falling wedge like previous ends of bear markets in 2018 and in 2014. Bear markets ended in similar ways, right? So what we've seen over the last couple of weeks is the following, right? So if we now just trace the leading edge of the wedge, you can see the resistance over here, the failed breakout over there. And over here, what happens is as price tries to break out, it can't get beyond the moving averages and they force price back inside the wedge, right? So you see the resistance at the 9 and the 20 weekly moving average over here. So the moving averages are key here along with the edge of that wedge. So right now, what you see again is you see prices trying to hold outside of the wedge, but restricted by the 9 weekly moving average, just like here, right? So it's all to play for. I mean, I shared the Ethereum chart that is on the edge of breaking all-time, the channel from all-time highs. And this is the equivalent in Bitcoin. So this is 69,000. This is the downtrend line from all-time highs. And we're over here. Now there have been candles on the other side of this wedge. So for me to think that Bitcoin has turned the corner, I need to see it above the 9 weekly moving average and consolidate above the 9, right? And then 9 is at 17,750. And so 17,700 is resistance, 16,200, which was a perfect hit, was the support, which is a back test of that wedge. So that would be the short-term view as far as Bitcoin is concerned. But if you can indulge me with one more chart.
So you're saying there's a chance.
I'm saying there's a chance, but it's really going to be touch and go, I think. I mean, I don't know. I mean, right now I'll be honest, I'm not holding any, right? So I'm unless it gets back above the weekly moving average, I'm not going to hold any of these coins, but I'm trading them. So I'm collecting as many, stable coins as I can get through the trading, but I'm not going to start buying again until we get closes above the weekly moving average. Now, this is my monthly chart. Now, this is a pretty interesting one to look at. So we haven't really talked about fractals, right? But here's a very good fractal. So you've got this fractal, this yellow space over here, back in 2013. You've got the failed breakout. It goes all the way to the other side of it over here, which is 2014-15, which was horrendous pullback, 90%, 86% or something. And then what you're seeing over here is the same thing playing out in large, in a much larger fractal. So you've got this downtrend channel over here, which were rejected at the 9 monthly moving average. And the key support, right, which held again, this is why 16.5 is so incredibly important. So on this ellipse over here, right, so this one over here, if I can just highlight it, right? So you can see that was the low of the November candle. It was perfect. It was a perfect hit. And then when I was looking for when we held that support, what I was looking for is if this support that we fell through, so this line over here, let me put it in a solid line so it's easy to see. This line is parallel to this support over here, the bottom of this yellow space over there, right? So you see that the resistance over there, the breakout, you can see the support along there. This is the 18.5 support that held for so many months, right? So 18.4, 18.5 was important for that reason, because it's a support that lines up with, if we lose this 18.4, then we could get to 6,000. We could meet the other side of this yellow space, just like Bitcoin did back in the day over here. It goes to the other side of this yellow space, right? So that's possible. So what's going to stop that happening? It's 16.5. So that's the key support that needs to hold. And again, it would end up, price would be back inside that wedge on the weekly chart. It'll be a failed breakout and it'll be a nightmare, right? So below 16.5, I think Bitcoin could have had an ugly end, right? Whilst it holds 16.5, notice what it did in December, and this is what we traded over the last early in December. We looked for the back test of 18.5. And we got there. It got to 18,370. So the thinking back in the day, so at the end of November and early December, was if this support is as important as I say it is, then we should backtest it before a failure or a breakdown there. And so we did backtest and we rejected 18.5. So right now, in a nutshell, as far as what happens next in Bitcoin is concerned, is whilst it holds 16.5, it has a chance, but it's going to be pressured as the 9 monthly moving average comes down. And we've talked about that a few times. As the 9MA comes down, it will end the consolidation over here. And it's a very tight space. So that's why I'm not in any rush to get into to buy a bunch of crypto, because I'm not going to miss much if I buy 18.5 or even if I buy the 9 weekly moving average, but there's a risk of a breakdown if it doesn't hold 16.5. And if it doesn't hold 16.5, then yeah, I think eventually
look out below.
Look out below, and I think the first stop will be 12.6, and that might stop the bloodshed, I think. But if the pattern plays out, then it could get all the way down to 6. Whether that's a year from now, 2 years from now, who knows? Something like that.
Yep. Awesome, Cookie. I always marvel at the accuracy that you put into your charts, the time that you put into them. So I appreciate you, as always, just being here, but also sharing those. Just fantastic work. So thanks for staying on an extra 30 minutes too. Greatly appreciate that. I know it's early or late, depending on how your night's going to go there. So don't want to keep you too much longer. GP, you got anything else?
No, do we get to all the questions in the live chat?
We did. Yeah, we
cool.
did. Yeah, there were a lot of commentary, but we got to the questions. Yeah.
Okay.
Well, and this will be our final show before the holidays. We will have another one next Friday. GP and I'll be back around the close, or at the close on, is the plan, right? On December 30th. Is that the right date?
I think so.
Yeah, December 30th. We'll be back around the close. We're off Sunday. Today was our podcast. So I always appreciate Cookie for stopping in. The quarterly check-ins work, but I appreciate everything that you provide on Stock Twits, even if it is a little trolling of the Bears and the Bulls. Cookie, I appreciate it. I love it. But yeah, thanks again. Just hang in there with us until next Friday, and we'll be back with another TA report.
Sounds good, man. Well, enjoy the rest of Christmas. Have a fantastic Merry Christmas, and well, have a Merry Christmas to everybody who's listening, and thanks for giving me the time to share some ideas.
Yeah, Merry Christmas to all.
Merry Christmas to everyone. Happy holidays.